Debt funds over the last couple of months have been giving equity-like returns, beating the Nifty. So we're going to find out how we can use those debt funds and make a little bit of extra money, perhaps, hedge against the volatility of our stock market. And we're going to take a look at how you can pad up your stock investments with other asset classes, become rich in the long term. We're going to bring in Dhirendra Kumar, of course, the CEO of Value Research, and he's going to help us make our portfolios smarter. Dhirendra, over the last 6 months, medium gilt funds have given us a return of 10.5%. Income funds, 8.2%. At the same time, the Nifty has given us a return of 6%. Now, as investors, we have a finite amount of money that we can allocate to all of our investments. Is there a case here for a higher allocation to, say, debt funds?
No, this is a kind of, the cyclicality of return from fixed income is always there. And this was a much awaited thing. Since April 2012, investors have been waiting for this rate cut, which never happened. And in 2013, we have been lucky with 3 successive rate cuts. And this is what has translated into these kind of returns. But I don't think, an investor who is investing for less than 6 months should get excited about it, should not change its course. And a long-term, because you will be in for a nasty surprise, as we were last year. We kept waiting, nothing happened. On the contrary, there were occasions when bond funds actually took a hit in the brief period. Likewise, if you're a long-term investor and if you have a reasonable equity allocation, then there is absolutely no case for your long-term money to be into fixed income or changing your allocation. I think what it means is that, if you're a medium-term fixed income investor, you need your money in 1 or 2 years' time, or you have some money lying in fixed deposit and fixed deposits were yielding high return. Maybe, you can optimize your returns here. So move your money to fixed income funds of the right kind, and you might be, and you will, it's about time when the returns could be reasonably high for the next 6-8 months.
All right. So any money that you have that you think you're going to need within the next 3 years, you should be looking at an income fund or a bond fund. Dhirendra, there are so many different kinds of bond funds available in the market right now. Could you help us narrow it down and give us 3 funds that we can invest in, both for security and for strong returns?
Narrowing down is an exercise of elimination. So, liquid fund for a few days or, a week, a short-term bond fund for a couple of months. So, you are left with income fund universe. Within the income fund, the dynamic bond fund, which are extremely flexible, they can reduce their maturity to few days to a couple of years or many years. They are the best vehicle, and I think they have come up, they have built a case for themselves in the last 4 or 5 years very well. If I have to list some, I would say, 2-3 funds. I would say SBI, ICICI Prudentials, and UTI bond fund, or SBI Magnum income fund. They are the reasonably impressive ones.
All right, so 3 impressive dynamic bond funds are on your screen right now. Dhirendra, they're giving us ICICI Prudential Income Fund, the SBI Magnum Fund, and of course the SBI Dynamic Bond Fund. Dhirendra, we have a question that's come in from one of our viewers. Krishna Sharma has written in. He tells us he's 72 years old and he wants to invest 5 to 8 lakh rupees in an income mutual fund. He wants to take on minimum risk with this investment. So obviously this is his retirement corpus. Now for someone like him, and I'm sure there are plenty of retired people who are watching this show right now. So for all of them, could you give them a couple of funds that they can use that perhaps beat the fixed deposits in terms of returns?
Beating fixed deposit consistently, I think it just might be the last opportunity to lock your money into fixed deposits. And if you're 72-year-old, then the senior citizen savings scheme, if you have not exhausted that 15 lakh rupee, which yields about 9%, that option is still there. So if you're completely risk averse, that could be a reasonable option. But if you're looking for more liquid options, then only consider short-term bond fund. They will not give you, they will not leave you high and dry.
All right, short-term bond funds. Dhirendra, very quickly, give us a couple of short-term bond funds that we can use.
If I have to list some, I would say UTI short-term bond fund, or the Morgan Stanley's, or the Templeton India short-term bond fund. These are the best option, best choice from the large universe.
All right, short-term funds that you can use, of course, for keeping your money safe and for, of course, beating the fixed deposit in terms of returns. Dhirendra, thank you so much for joining us.